On today's video, we answer the question, what is margin? These special broadcast videos replace our normal live opening and closing bell shows, as it is my vacation time, or as we say in the UK, time to go on a holiday, sit on the beach and have an ice cream. But we are going to premiere these videos at the normal times of the opening and closing bell, and hopefully you'll join in for the live premieres and be part of it each time. Now, I will try and pop in on in the live chat as it premieres, an update with stocks and shares and what's going on, and make sure everybody is here doing all the normal stuff, like smashing the like button. Make sure that you smash the like button. I very much look forward to seeing you back when I return. And also, don't forget to subscribe if you've not subscribed to this channel before. And now on with the rest of the video. So what is margin investing? Well, essentially, margin investing is when you are borrowing money to buy your assets, stock, shares, crypto, whatever. Basically, you are using the brokerage's money. You are using the brokerage money to buy assets. Now, depending on your brokerage will depend how much margin is available to you. It's normally you have to have $25,000 in your portfolio before you can margin. So you've already got a good amount of money invested as collateral, if you like. But essentially, if you decide to margin trade, you have to be approved, turn on the options. In Robinhood, it's very, very simple. And then it will present you with how much margin that you are allowed to spend. Essentially, then you can use your margin money, that it's basically the brokerage's money, to buy stocks and shares. Now, or any asset that the brokerage holds. Every asset will have its own risks. Some assets are more risky than others, and the margin maintenance, and we'll discuss that on a future video, will be higher and the risk will be higher. But essentially what you're doing is you're using the brokerage's money to invest in stocks. Is it a good idea? Well, we might discuss that in a future video as well. Margin will come with a certain cost. It's because you are borrowing money right now at the time of this video. 5.75 is the APR for Robinhood, which is amongst the cheapest in the industry. Pretty good. So your stock has to make 5.75 a year before you make any money. Well, you would regard that as pretty likely, because at the end of the day, why are you investing in the stock market to make less than 5%? For me, I'm looking at making 30, 40, 50, 100% in a year. That's the purpose of investing and risking your money, after all, on the stock market. But remember, when you use margin, you still owe the money back. No matter how the stock goes up or goes down, you still owe that amount of money. Doesn't go down because the stock price has gone down. If you borrow $10,000 of the brokerage's money to buy stock XYZ, you still owe that amount of money whether the market has gone up or down. So just bear that in mind. But there you go. That's how margin works. And we'll discuss the other pros and cons of margin on another video. For the next video in the series, make sure you click up here and join me for another live premiere until I return from my holiday. So I hope you enjoyed the video. I very much look forward to seeing you back live again. Did you leave a comment below the video? Did you engage in it on the live streamer? Hopefully you did. And did you remember to like the video? Very, very important. And if you did enjoy this video and you would like to highlight your comments below, you can actually click here underneath the video and leave a comment and do a super thanks if you want to highlight your comment. I very much appreciate you doing that, and it will highlight your comments and I will reply to everyone's comments. I very much look forward to seeing you back on October the 31st. Until then, thank you very much. Take care of yourselves and each other.